All right, let me. All right. So as y'all can see, from a weekly standpoint, I trade the power three. So you got accumulation, manipulation, and then distribution to the downside. So you categorize the power three in the days. So you got Sunday through Monday is your accumulation. You got weekly manipulation, which is Tuesday put in the high of the week. And then you have distribution is Wednesday through Thursday. And after this, you have Friday by itself. Friday can either be a reversal or, as we seen today, it can be a continuation for a redistribution, right? So for a classic Bears week, this is what we're looking at right here. Tuesday put in the high of the week. Wednesday to Thursday distribution. We trying to catch the high of the day or the high of the week. So whether you're a position trader or you're a intraday trader, you're trying to catch the high low of the day. So we're gonna go back to the charts. So I took two trades today, but I'm gonna start off on a weekly time frame. So we got NQ and ES next to each other. If you look, you got Tuesday right here on NQ, put in the high of the week, never got swept. And then you have Tuesday on ES, how I got swept. So this is an SMT within itself. You have an SMT between NQ and ES. So that's already telling us that price is going to reverse down to the downside. So SMT is confirming the reversal. So it's up to you to go on the lower time frames to find like your entry model, the right time to get in your trades and stuff like that. So I'm going to be breaking down both of my trades that I took. I made $800 in the Asian session, and then London session I made like 3 point something. I just know it's what is it 3.2 3,200 or something like that. But I made 4,000 at the end of the day, closed it off at $4,000, right? So just going off rip, looking at the market, you can obviously see we're on a 4-hour time frame, and you can see the SMT already on the 4-hour when we swept that high. So we put in a new low on NQ, and then we put in a new high on ES. So this is our SMT, right? On top of that SMT, you have something called a PSP, which confirms the SMT. So it's when we have the correlated assets, they close in two different candles. So you see on NQ, we close bearish for the SMT, but on ES, we close bullish. So you will mark out the wick of that candle. You mark out the wicks. And as you can see, price came back into the PSP on the higher time frame and ended up dropping, but we're not entering off the higher time frame. We're trying to dig in on the lower time frames and see our entry models, right? So I'm gonna break down today. So my first trade was in London session. My first trade was London session, right? So I'm on a 5-minute time frame, 15 minute, it doesn't matter. Time is fractal, so price is fractal, so it's going all, if it happened on one, it's going to happen on another. So we took out this low in the Asian session range. So this is the liquidity that I got taken out, right? So after we take out this liquidity, we end up sweeping Asian session sell side. So we took out the session lows, right? So we got Asian sell side liquidity. After we took out Asian sell side liquidity, we caused a 5-minute market structure shift to the downside. Back to the upside, confirming that reversal. And then we created an imbalance. So we have a fair value gap that's right under minute opening price. So I teach people that whoever learned from me that if we was to have like if you break above or below midnight opening price, New York session opening price, true month open, like whatever price level that is, you can use that as support and resistance. So the fact that I had a fair value gap on top, right under the midnight opening price that got used as support. You can see we never closed below it. We kept coming and rebouncing and bouncing off. On top of this fair value gap, I had got my entry just off that alone, right? So usually I would target Asia highs, but thank God I didn't, because if I did, I would have got stopped out in profit. But if you're not clear of where the draw liquidity is going, you can use something called standard deviations, and it's when you have your Fibonacci and you place it on the most recent market structure shift of whatever you're trading, and you're going to target this area I use. It's the -2 to -2.5 standard deviation, and that usually gives you the area of a retracement, where a retracement is going to happen, predetermined or a reversal. So I'm going to put it on. Okay. Boom, right? So boom, you got your standard deviations. I got my entry off the fair value gap. So this is my entry, stop loss below the fair value gap right here, and we targeted that -2 standard deviation. As you can see, TP got hit beautifully. As soon as we hit that -2 standard deviation, what did price do? Price reversed down, right? Remember, this is called a reversal / retracement standard deviation. All right, so boom, my TP already got hit in my sleep. I woke up, I'm up $800 or whatever. I was in on micros. No, I was in on minis. I got stopped in the midst of this. It could have been way more, but I'm not trying to be greedy. I'm actually trying to take my time with these accounts. And since I'm full time, bills got to get paid, right? Bills got to get paid. So let me show y'all how I caught the top of the New York session, right? And you can vouch, anybody can vouch for me. I was in the chats. If you join the chat, premium or whatever, 80% off, bro, I was in these trades, right? So we go again, right? Let's clear the chart. So this is trade number 1, right? Trade number 1. Now let's go back to the actual session where I caught the high, right? I caught this high, right? So let me show y'all what happened today. So today, NQ swept previous day highs. ES did not. So we have a weekly SMT with an intraday SMT. NQ swept previous day highs and ES didn't. So that's an SMT within itself, right? So if we turn on the indicator, where is it at? Hold on. New week opening gap by Kryptonite. We can see that we had a new day opening gap. That was to draw liquidity for our manipulation going into New York, right? Let me fix the settings on here so we can see. See, multiple new week opening gaps. That was to draw liquidity, swept previously highs. We end up displacing below, right? Wait, before we even get into that, let me show you the power of these standard deviations, right? So I'm gonna play them out, right? So standard deviations, bro, you can get the literal high or low of the day when plotting these deviations, and it's mixed up with time and price, right? So you get the standard deviation, you go from the session shift. You either do the sessions range or the session shift. So you use the power, the previous 4-hour candle to get the higher low for the next 4-hour candle. So we know each kill zone is a 4-hour candle. We got Asia, London, New York, right? So we put our deviation on that shift. So when you have a deviation already on, right, this is giving you the area where you want price to reverse at, right? So I'm marking up my -2 to -2.5 deviation. And this, remember I told y'all, this is a reversal retracement. God dang. Standard deviation. In this area, I'm waiting for price to come up into this area. Right? Come up into this area. Displace below. And then after we inverse these new week opening gaps, I'm going to use them as areas of resistance to hold my entry up here. So price should, after we displace below, price should not come back up into these areas, right? And because we swept previous day highs and ES did not, ES is obviously going to be the weaker pair, so it's going to fall way more than than NQ, right? So you see how ES is already at previous week lows. NQ is there, but it's not. It's still got a couple. You know what I'm saying? A little ways to go. Not a little ways to go, but a nice small drop to go. ES is already right there, so we can anticipate us having the SMT down here. That's going to send us up for half, so we can then down lower because I want the previous month lows to be swept. But as you can see, I have my deviations on to have my area where I want price to reverse at. So we're going to let it play out. Oops, why is this on? Boom. So soon as we hit into this area, right? I'm on the 1 minute. I'm trying to find an entry on where to enter, right? Or I'm on a 5 minute. So you go on a 5 minute time frame. We drop, and we come right back into this inversion. This is your first PD array for your entry. This is the first PD array for the entry, right? So let me turn off these indicators so y'all can see everything. First PD array for entry. We came back into the inversion. After we come back to the inversion, you got your sale. You enter. Or if you're on a 1 minute breaker, come back up. We drop, right? I want a 5 minute. So I see this inversion. Me personally, I already entered off my area. So I'm entering off of the area in the zone, right? So then we get our entry. And because we swept previous day highs, the draws of liquidity you have is previous session lows, after your previous session lows, you got the standard deviation projections, or you got previous day lows because that we swept previous day highs, so that's the obvious next draw liquidity. So let's turn back on the market profile indicator. So you can either TP at London lows or Asian lows, just 2,000, or you have previous day lows just down here, $5,300. That was my TP. I did not hold for that long. I held for about halfway there to get my account to 4,000. We started chopping up. We started messing around a little bit, and I should have been managing on the 15 minute because when we dropped, the 15 minute was way cleaner. But I got out for like $4,000, which is right here, off one con. And I'm just trying to show y'all the power of if you catch quality moves, you don't need multiple contracts to make money. I could have slapped on 4 or 5 contracts, or you know what I'm saying, and made more. But it's like, you know what I'm saying, I risked 175 to make $4,000. So that just gives y'all the art that I'm taking on these high quality setups using the time and price standard deviation ICT concepts that's helping me get these type of results. And but you don't need to have 3 to 4 cons, or you know what I'm saying, it don't have to be a lot. You can most definitely take a nice position with one. Obvious draw liquidity would have been these lows right here. Easy TP for $2,300. Who is not happy with $2,300 in one single day? Me personally, I would be ecstatic, right? So TP was $4,000. Your obvious draw liquidity previous day lows. I even put it on my Instagram story where before this move happened, I said I wanted previous day lows, targeted it, and I didn't hold the previous day lows, but I was still happy with the 4,000. But those are the 2 trades that I took for today, and I'm kind of I'm happy with my results today. I gotta go journal. I got a class due tonight. Pretty happy about introducing this student to this way of looking at the market, and yeah, I hope y'all enjoyed the breakdown because the content I'm finna start bringing out and everything is most definitely what I'm finna start getting into for sure. Could you go over standard deviation projections from previous days? Yeah, I gotta make a video because my son is gonna actually be here in a minute, so I gotta go to get ready for him to be here. He getting dropped off. So if you text me on Discord or text me on Instagram, I already have a video for deviations on what you asked, and I'll send it to you. It's a private video, but I'll send it out. You just got to hit me up on Discord at Mario Trades, or whatever Discord you see me in, just add me and ask me. Or hit me up on Instagram at SMC Mario, and I'll send it to you. SMCMXRIO, and I'll send you the video. So just let me know, and I'll get that to you. But I am finna post this video as a YouTube video. I was doing a trade breakdown, even though I'm live streaming right now. So if y'all want to rewatch, got any questions or anything, I'm finna literally drop the video as soon as I get off here. I just need some extra content. But I will see y'all. Yeah, if y'all hit me up on Discord or hit me up on Instagram, I will help y'all. So just hit me up and feel me. I can help. I don't mind helping. I don't mind, working with y'all. Just text me so I can help. I'll send the videos I made. I have videos already made on this. I got everything already made. Just hit me up and I'm gonna get y'all right. So I'm finna go do this class with my students. I'm gonna hit y'all up. I'm gonna live stream probably tomorrow or Sunday, or going over my weekly analysis. So I'm gonna catch y'all in the next video, and I appreciate y'all for coming and watching. I know I ain't been live in a minute, but I most definitely do appreciate the support and the love. So, peace.